Hello everyone, my name is Mahmoud Yunus and this is an individual oral presentation of the model Sustainable Strategic Decisions about the company Louis Vuitton Moet Hennessy.
Hello Yunus, can you tell me please, what's today's agenda?
Yeah, of course. So first of all, I will speak about an overview of the chosen company, then about its corporate governance and board of directors, then about the performance of SRI stocks, investment for value creation, and strategic decisions for business expansion.
Please tell me about the company, whether it fits the criteria.
Yeah, of course. So first of all, it's a multinational French company which operates in around the world, in Europe, Asia, and US, and has more than 5,000 stores. It was created in 1987, so more than 20 years. There is more than 150,000 employees. It's listed on Paris Stock Exchange, pays dividends 3 times a year according to Bloomberg, and 5 major sectors of operation is wine and spirits, fashion and leather, perfumes and cosmetics, watches and jewelry, and selecting retailing.
That's interesting, thank you. Now please tell me what you know about corporate governance and how it works in your chosen company.
Yeah, there are different definitions about corporate governance, but I would say it in my words that it's the system of rules, practices, and processes by which a firm is directed and controlled. So on the slide you can see another 2 definitions which I also like, especially that it's the way in which suppliers of finance to corporations assure themselves of getting return on their investments. In the theory of corporate governance, we should speak also about the board of directors, because it's the primary force influencing corporate governance. Here we can speak about shareholder and stakeholder theory, so whether to support shareholders in generating the profit or also to pay attention on stakeholders such as employees and suppliers. There is an agency theory that there is a principal which are usually shareholders and an agent who are executives and they work in the contract. Also, I want to tell you about the unitary and 2-tier board systems when there is 2 boards, management and supervisory, and the difference between unitary, but it will explain further because it relates to Louis Vuitton. And also there are different corporate governance codes like UK and US, and also I found out that Louis Vuitton, for example, it relates to AFEP-MEDEF recommendation code.
Tell me please about board of directors in Louis Vuitton Moet Hennessy.
Yeah, so in Louis Vuitton Moet Hennessy, board of directors is a strategic body which is responsible for value creation and defense of the company's interest. It implements, as I already told you, AFEP-MEDEF code and acts in compliance with local regulation and civil law. So speaking about 2-tier model, it is relevant to Louis Vuitton because there are 17 members, so it's large board. From them, 9 independent directors and 1 representative from employee, which is also applied to the 2-tier model. The CEO and chairman is Bernard Arnault, and there are 2 boards, management and supervisory board existence.
But have you compared it with competitors?
Yeah, for sure. So I compared it with a company from another country, from UK, Burberry, which has unitary board, and the difference is very clear. So there are only 8 members. They all in one board. CEO and chairman are different persons.
How do you think is this model effective?
So yeah, I suppose it's effective and also it is very competitive. Why? Because in Louis Vuitton Moet Hennessy there are different committees such as audit, nomination, compensation, and there is also supervisory board which is controlling other who takes the decisions. In unitary board, when people are all in one board, so the decision of course can be made faster. However, they will not be absorbed by others. And as each of committees has internal rules setting forth its composition, role and responsibilities, of course it's very effective. Also, I want to tell you that in Louis Vuitton Moet Hennessy, the insider model of board of directors is also performed. So you can see that main capital holder is Arnault family. The bar chart below shows that it's they have more than 47.5%. Also, it means that so I just want to say that it's also quite an effective as well as outsider model, such as in Burberry, for example. You can see that in Burberry capital structure is mainly protected by institutional investors and others, because when it's insider model, first of all, the family is interested in profit generation. However, they will not only behave in their own way, because there will be an incentive to do things well, because other institutional investors or individuals, which also are capital holders, they control them. So this 2 model system in insider model, it's also quite effective one.
Can you tell me please about about the remuneration policy?
Yeah, of course. So remuneration policy in Louis Vuitton is quite transparent. It follows FFMDF code. It's also relates to the performance and non-performance indicators. So, for example, there is a variable compensation. You can see it in the table below. For example, Bernard Arnault, his variable compensation bonus will depend on his performance. And in Burberry, for instance, top leaders receive bonuses and payment that do not reflect performance. So 2.2 million of Great British Pound they will receive in any way, even with a very poor performance. Also, I want just to say that shareholders, they set the overall annual maximum amount that may be allocated. And yeah, so that's how remuneration policy works. And what I very like that it is related to financial and qualitative targets achieved by directors. So it's very good.
Great, thank you. Can we switch now to another topic? Could you tell me about the performance of society responsibility investment stocks?
Of social responsible investments, yes, of course. So first of all, just for you to know that it's the practice of investing resources in order to achieve a positive social effect. They're also called ethical investments, and it's actually when you invest in certain stocks like solution to social problems or regional development, and you refuse to invest in other stocks or companies which has a harmful effect. Actually, responsible effect is those companies who maintain and follow the Sustainable Development Goals by United Nations. I would also point out that it's mostly long-term financial performance because you will not see the evident link initially with financial performance when you invest in such things, but in long perspective, yeah, it is. There are some researches about that portfolio with the social responsible investments in 2010 outperformed the market, and afterwards also in Dr. Bingham paper with his colleagues, they make an evidence that this trend was maintained further in different sectors, and actually the graph below shows that from 2012 especially to 2020 there was a sharp increase in such investments.
What about performance of such stocks and companies?
Yeah, so actually Louis Vuitton Moet Hennessy, I point out the main points of its social responsible investments. They invest a lot in absolutely different aspects. You can see this in the texts with amounts, and we can also see on the table retrieved from Bloomberg about ESG disclosure score, so it's environment, social and governance. Actually, there was a steady growth in this score, and also there was a steady decrease in harmful GHG emissions. In social disclosure score and in governance disclosure score, there was also an increase. And we can see that overall between competitors, Louis Vuitton, Moet Hennessy, L'Oréal and Burberry, on the bar chart where they three are presented, there is a positive trend. However, there are other companies like Inditex, it's a Spain retail company, which put, I would say, quite low attention to this, and there is a decreasing trend.
Italian company doesn't improve its social investments.
Yeah, I would say this is bad because, first of all, in long perspective, it will be harmful for the society and also environment and so all. But there is an evidence from also graphs from Bloomberg. They shows that Louis Vuitton, Burberry, and L'Oréal, which are first three graphs, and they have a very good ESG score, and corporate social responsibility is on very high level. So such stocks, they outperform the market almost in every year of the analysis. However, Inditex, which performed poorly and showed a downward trend in ESG score, it underperformed the market. So, of course, this is not the only indicator which should be taken into account when choosing stock, but it shows us that, for example, if you want to invest in this sector, the attention could be paid definitely on ESG score, because, yeah, such stocks in this situation, they perform well. Also, I want to point out that in those papers which were researched by me, the oil sector and gas companies, they were researched, and those who has a very high level of corporate social responsibility, they also outperform the market already during more than 10 years.
Can you tell me please about investments for value creation?
Yeah, of course. So just to say the definition, I would say that when you give something valuable to receive something else that's more valuable to you, it is an investment for value creation, actually. And you should, first of all, pay value for owners, make value for customers, and make value for employees, so for shareholders and stakeholders together. And this all will give you a value of business. So it's very important to know how to use appraisal techniques in order to understand these investments. And there are some of them, for example, payback period and ARR, but they're not, I would say, very full because there is no adjustment for the time value of money. Such of them like NPV, IRR, and discounted cash flow. So NPV is net present value, IRR is internal rate of return. They already use discount rate, they already use cost of capital and time horizon, so it's better types. However, there is a critics of this because cost of capital sometimes is chosen too high or too low, and sometimes they select discount rate in the wrong way. Real option approach and BCG matrix show us how to prioritize different businesses to higher value, and also can be used in order to analyze investment for value creation and make a strategy. Earnings per share and return on investments is just indicators which can be analyzed already after strategic decisions, and can show us how it works.
You applied any of these techniques to your company?
Yeah, of course. So I applied the BCG matrix. You can see that I point out the stars, question marks, cash cow, and poor dogs, and also I investigated that this company used the M&A very well, and especially this M&A provides dominance between competitors in star and fashion and leather. And also there is a graph which shows that they pay a lot of attention on M&A, and I suppose this to be main value creator, because according to the financial analysis, it showed that during those years when M&A deals were high, they have a lot of increase in market capitalization and of course in enterprise value, which should be also taken into account when we speak about BCG matrix, because it goes together with the economic value added, in increase in revenue, net income, earnings per share, and yeah, so there was a very big increase. Also, I put attention to regional breakdown, where Louis Vuitton invested a lot, like Asia and United States, the financial performance was the best one. And also they invest a lot, as I already said, in fashion and leather of goods. And you can see by revenue, it also provides us the best results. After already goes selective retailing, and afterwards watches and jewelry.
Now, what are your strategic decisions for the company in order to improve its performance and increase value according to what was studied?
Yeah, so actually I would say that first of all, I paid a lot of attention that Louis Vuitton, like Moet Hennessy, especially Louis Vuitton, which is like the main body of the company, it doesn't have an outlet. So it means that the dead stock, there is no dead stock resale, and the unsold stock should be just thrown away, or anything should be done. So actually they can increase their profits implementing the outlet, because all luxury brands, they have this. So this will not be a big trouble actually for reputation. I have found out that there may be an online reselling in nano stores. However, this website where I took this, it said me that it only will be done by them, so it is not yet. But this would be a great idea in order to increase profit and go to online market. Also, I would say that they should pay more attention on media and digitalization, which is their poor dog, because nowadays not enough attention was paid to new digital marketing. They have only old ways of marketing, like TV, press, catwalk, and events. Nowadays, to attract more customers, digitalization should take the first place, and these investments, I think, will create more value just by increasing sales and attracting new customers. Because yeah, everybody knows Louis Vuitton, but in different regions where people use a lot of media and digitalization, this could be also a good marketing strategy. I would say that they can use BCG matrix and the real option approach to analyze their deals, especially in COVID times. So there is an example how it could be done. So result could be either good or not so good as was expected, and actually it would be very useful for internal users and external investors as well. So it will just show that they analyze their deals, and this will also attract new investors. I would say that they can continue their M&A strategy because as we see, it creates their value year by year. And also they can try to developing in other markets because they invest a lot in Asia and United States, which provides them with a very high revenue. However, I think developing in new markets, attracting new customers will also be a good strategy in order to increase sales and increase the value of the company. Maybe should be paid more attention on perfumes and cosmetics, because this is also a very nice area to develop. And of course, they should remain transparent in order to attract new investors, because everybody likes transparency, especially in financial reports and corporate governance standards. And they should support the development of social responsiveness in line with the United Nations goals, because as we already studied, such stocks which put attention to this, they are more valuable, and usually they outperform the market and also attract more investors. So actually that's all I wanted to say. Thank you very much for your attention. I hope it was very useful, and here are the references which I used during my studying. So the 2 pages of references. Thank you.